Nvidia is recovering after it sold off over $500 billion in market value earlier this week. Joining us now, Tony Wang, T. Rowe Price portfolio manager. Tony, great to have you with us.
Great. Thanks for having me.
It's unclear what the ROI on an AI investment is, but it is clear that companies are willing to spend on the hardware, at least at this point. How do you think about just the rush to spend and the possibility of pull forward of demand for Nvidia?
Yeah, it's a great question. I mean, I think that in general, the companies that are spending see a lot of ROI here, and there's a reason why they are deploying so much capital in a pretty austere environment. And so I think that, there are a lot of companies that are experimenting and prototyping, but generally how it works is that you are trying to experiment with a small number of GPUs before you really deploy into inferencing and really spend a lot of money. And so I do think that we are seeing a lot of use cases with drug discovery, with autonomous driving, with like optimization of logistics, as well as if you look at ChatGPT, it's like really ubiquitous in terms of like so many use cases that it could be deployed on. So I do think that we are starting to see the ROI. Obviously, we need to see more ROI given the amount of capital that's being spent, but I'm optimistic for the long term here.
Nvidia stock has recovered, proving that the recent pullback was a temporary thing and that investors had nothing to worry about. But in addition to the stock's recovery, there is a lot of great news surrounding Nvidia stock, which definitely contributed to its recent surge. In fact, Nvidia stock saw a boost recently after Citi analyst Atif Malik raised his price target from $126 to $150, implying an upside of around 20% from current trading level. This analyst is bullish on Nvidia for a very overlooked reason, and in today's video, we're going to tell you all about it. Additionally, we'll cover some other analyst opinions on Nvidia stock, so stick around if you want to know whether experts are buying Nvidia shares or letting go of them. But before we get into today's video, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
I'm looking at the notes here. Well, I'm good. I'm not as good as you think Nvidia is going to be, though. I mean, these are not typos. You think it's going to head close to 70 times PE before the end of the year, and it's going to hit $6 trillion in market cap at $250 a share? Do tell.
I think so. I think so. By the end of the year, as people start to look forward to what they're going to do in 2025. Yeah, like I know you talk all the time, Scott, to people like Stacey Raskin, who says, this stock is still cheap, and yet nobody seems to believe it. But here are the numbers. Over the last 5 years, Nvidia's average look-forward price-earnings multiple has been 40 times. Yesterday, after this 2-day correction, it was 39 times forward price earnings. But there have been 3 times in the last 5 years where it's had a look-forward price-earnings multiple of over 50x, and 2 times in the last 5 years where it's gotten just about to 70x, and then it pulled back. So we just haven't seen that euphoria yet.
It didn't just pull back at those times. It got destroyed.
It got destroyed, yes, a couple of those times. So, this is a high flyer, and expectations can reset on a bad earnings report. But they can also get equally overhyped on good news. And despite the fact the stock's had an enormous run, the euphoria hasn't yet caught up in terms of the go-forward multiple. I think what's going to happen in the second half of this year, as people start to see how well the Blackwell chips are selling, how good the gross margins are on those, and start thinking about what's to come with the Rubin chips around the corner, their next generation after that, I think we'll start to see that euphoria reflected in a lofty go-forward price-earnings multiple. And if that happens, this thing could go to $6 trillion market cap.
According to analysts at Citi, Nvidia is set to benefit greatly from a wave of demand for AI helpers designed to process and perform specific tasks for businesses. In fact, the analysts said that they expect the so-called AI agents to one day make up a little under half of the sales at Nvidia's key data center segment. These experimental systems run on programs like OpenAI's ChatGPT-4 or similar models and can learn from a given dataset, make independent decisions, and, once prompted, carry out actions autonomously. The Citi analysts said that these agents have the potential to scale enterprise productivity and, at their full power, can be a massive source of spending by companies. They also wrote that while AI agents have yet to reach levels in which they can be fully relied upon, they already surpass humans in knowing what to do in practice in some instances. Since Nvidia is already known as the maker of the AI chips that have fueled a boom in enthusiasm around the applications of the technology, the company stands to rake in more revenue from its Retrieval Augmented Generation, or RAG platform, according to the Citi analysts. They also argued that the RAG offering, which is a part of Nvidia's AI enterprise segment, may provide the base on which AI agents are built. Elsewhere, the analysts increased their consensus view for Nvidia's profit per share in the 2025 and 2026 calendar years, citing optimism around the semiconductor giant's plans for its next generation of Blackwell AI GPUs. Notably, the first chip, the GB200, is going to ship later this year, and Nvidia's CEO, Jensen Huang, told investors and analysts during the company's Q1 earnings call to expect a lot of Blackwell revenue later in the year. This is one of the many reasons why investors should be rushing to buy Nvidia shares, but not the only one, as we will see. Hello, everyone, and welcome back to Investocracy.
Brad, thanks so much for being here with us. I just want to get your broad take on positioning in tech right now. What are you seeing? How would you categorize the positioning that you're seeing in the tech space?
What we've seen, Maddie, is a significant run-up in some of the headliners. Nvidia, of course, we've been talking about that all morning. But at the same time, you're starting to see a bit of a pullback there, and that's fine because we've seen some insider selling, which makes sense. But when you look at the underlying trends, yeah, there's some companies coming up underneath Nvidia in the artificial intelligence market, but at the same time, Nvidia is still amazingly dominant. So, a little bit of a pullback that doesn't worry me necessarily in the short term, as long as the trends remain positive, and they are. And those other companies give you other opportunities going forward. So I don't see this as a Nvidia story. I see this as a continued growth story for the industry as a whole.
Citi has every right to be bullish on Nvidia's AI agents, as there's actually a huge market for them. In fact, the global autonomous AI and autonomous agents market was estimated to be worth $4.8 billion in 2023, and it's projected to reach $28.5 billion by 2028, growing at a compound annual growth rate of 43%. And when you consider the overall enterprise AI market, you'd see a much bigger opportunity for the company. Indeed, the market for enterprise AI is rapidly evolving, and analysts expect it to witness a compound annual growth rate of 44.1% to reach $270 billion by 2032. On the other hand, the generative AI market is massive on its own, and it will definitely cross $1 trillion by 2030. And since Nvidia is the leading player in all of these markets, it's no surprise that analysts are expecting explosive growth from the company. In fact, the Citi analysts actually increased their calendar years 2025 and 2026 EPS forecasts for Nvidia by 7% and 13% respectively, based on the anticipated growth in the production of the GB200 for NVL36 and 76 configurations. The firm's outlook on AI adoption is optimistic, suggesting that it is in the early to middle stages, or the third or fourth innings. This perspective underpins Citi's continued recommendation to buy Nvidia stock, as the firm anticipates further growth and adoption of AI technologies. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
You're deeply invested in tech. Would you place any bearish bets or any type of investments betting against Nvidia right now?
No, and I am not exactly an Nvidia bull, but the reality is that treating one of the biggest, most valuable companies in the world right now, like it's any other kind of meme stock, I think is dangerous. That it's Nvidia is such an interesting name right now because on one hand, you have names like QQQ, those ETFs that are having to buy a ton of it, sort of because of their rule-based indexes, and you also have a name that's held almost 80% by retail investors. And so unless you see a huge U-turn by that retail investor who we know is not always super logical, I think that it's really, really scary right now to bet against that name, especially after the split when you see the price and you think, hey, that's cheap. And no, it's just divided by 10. But it still feels, I think, for the retail investor cheap right now.
I know you say it's not a meme stock, but it does have large retail ownership. I know it's something that you're also watching when it comes to Nvidia. I just want to go to the tech trade in general. Any concerns from you that this might just be a bubble similar to what we saw during the dot-com bubble back in 99, 2000? SocGen out with a note yesterday basically saying that the S&P, it could go all the way up to 66, 66, but that would be with high concentration. There's also some other setups there, but they also say it could also swing down to around 4,000. Are you worried about that kind of volatility in the second half of the year?
Look, for people like me who were in elementary school the last time that happened, the reality is that was a very different kind of bubble. You had companies that were literally just spreadsheets, right? Or a hand sock puppet that were commanding these sky-high valuations. These are, for the most part, real companies, right? Even Tesla. I love to beat up on Tesla. They have real cars on the road that are usually safe. So the reality is this isn't 99. This certainly is not 99. Now, is this something where it could look a little bit more like 2008 in the financial sector, not necessarily all the knock-on impacts, but the financial sector where you say those were real banks and, they were kind of over leveraged and they couldn't sort of get out, from over their skis. I think maybe something more like that. But the reality is that the next crisis almost never looks like the last crisis. Okay. And while I do think the names are frothy, I don't think it's a repeat.
The semiconductor industry has been a reliable industry for long-term investors for many years, and many chip makers have benefited from AI tailwinds as companies rush to capitalize on the new technology. But it's not just AI, as semiconductors are also found in everyday devices and appliances. So, semiconductor stocks are considered great stocks to own, and investors should look at the iShares Semiconductor ETF to see how much semiconductor stocks have been outperforming the stock market. This ETF has gained 31% year-to-date and has gained an outstanding 287% over the past 5 years. To put that into perspective, the S&P 500 hasn't generated that same return in more than a decade. Nvidia is a semiconductor stock that's been literally carrying the S&P 500 to all-time highs, and it's also the largest holding in the iShares Semiconductor ETF. While that ETF has performed well, Nvidia has been on a historic pace. The stock has more than doubled year-to-date and has gained more than 2,700% over the past 5 years. However, there is currently some short-term volatility, as Nvidia recently entered a correction period that has resulted in a 12% decline from its all-time high. There's a slight cool-down with the stock split finally done, but the company's financials remain incredible. In fact, revenue increased by 262% year-over-year in Q1, while net income surged by 462% year-over-year. Nvidia is still reporting double-digit sequential growth rates. The chipmaker also indicated growth will continue based on its forecasted revenue of $28 billion for Q2. The stock also has many supporters in Wall Street and is currently rated as a strong buy. The highest price target of $200 per share suggests that the stock can gain roughly 70% from current levels, and this is why Nvidia stock is still a buy in our view. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.